Hi, Nupur. I think you can present your screen now.
Yeah, we can see your screen.
Yeah, we can see that.
Yeah, so the verse of the Bhagavad Gita, which I'll be just explaining or translating basically, is the chapter is from chapter 2, verse number 50. And the shloka is as Buddhi Yukto Jagatiha Ube Sukrita Dushkrite Tasmad Yogaha Yujrasva Yoga Karmasu Kaushala. So, the if anyone from a background who is not knowing Sanskrit, I think we can very well pick up the words sukrut and duskrute. So that means something good or bad. That is what I think they are talking about. So just to explain it further, I'll just explain it in a form of a flow chart. So there are two types of result. Like whenever we do a type of a work, so there are two types of results that we get. The result can be a good result as per our expectations, or the result might be a bad one, which probably we might not have expected. But if we devote both these results to the God, that is good or bad, if those results are devoted to God, so that means you don't care whether it's good or whether it was in your favor or not in your favor. So this is called as yoga. So this is the very brief gist of what the shloka is saying. Further, how do we get these results? So the results are an output of a work or a karya or some kind of deed which is done. So where do we do this kind of a work? हमारा जो भी हम कार्य करते हैं उसमें किस चीजों का इनपुट रहता है. So that is you are determined to do something. Suppose you decide that I want to get a particular degree. So you're determined. That is a sankalpa which you make. And the second one is you take a decision that I want to take this degree or other degree, whatever it is. So you take a decision that is called as nirnay. So the nirnay you do take, that is a decision that you take, comes from your intelligence. That is called as buddhi. Buddhi, the intelligence, the analysis helps you take the decisions in your life. At the same time, the determination is made by the mind. That in Hindi we call it as man. हमारा मन निश्चय करता है या हमारा मन एक संकल्प लेता है. But what the shloka says, what Sri Krishna says in Bhagavad Gita is, if you fill up your intelligence, if you fill up your buddhi with godly attributes, that is samatva bhav, that is something very similar to God. So that is called as godly attributes, some good attributes which we have always learned from the beginning, from our childhood. So you need to make your intelligence in the way of the God. So this at the end will help you control the mind. Even someone having a very small knowledge also about Bhagavad Gita, you might know that हमारा मन control करता है हमारी सभी इंद्रियों को. So it is very important to control your mind. And how will your mind be controlled? That is with the help of the intelligence, the buddhi. But you need to fill up your intelligence with the godly attributes. And all this, when completely you follow this path, it is called as yoga karma kaushala. But now talking about the next thing, that is how do you have to uh, get your work, in which way? What is the way to do the right work? So I'll be talking about karya, deed, and work. So there are two types of karma. That is, one is sakam karma, where you are probably desirous of doing getting the result. So आपने कुछ कार्य किया और आपको उसका फल चाहिए. So that is sakam karma. And the second one is the nishkam karma. That is where you are not desirous of getting a particular output or a particular result. So when you are doing a nishkam karma, that means you have just left the result onto God. You are not expectant of anything. That indefinitely leads to yoga. But If you are doing a sakam karma, that means you are expecting something, then you will have to again take a birth to complete the desires which you have probably not fulfilled them, or to fulfill your unsatisfied desires. तो आपको वापस उसके लिए जन्म लेना पड़ता है, एंड बाद में आपका जन्म होता है तो मृत्यु भी होती है. So this is like a vicious cycle. So having desires or having expectations from whatever kind of karya you do or whatever kind of work you do will make you enter into this vicious cycle of birth and death. So it first is birth, then you die, and then you again, during the cycle of from birth to death, you again have some desires. You keep thinking that no, मैंने ये किया है तो मुझे ये तो output चाहिए ही. You are desirous, and then that leads to your birth and death. So जो इंसान इस बात को समझ लेता है, the crux of the whole shloka is the person who has understood everything. The what the shloka says, he is relieved from this vicious cycle of the birth and death. That person will not ever take birth again, and उसे मुक्ति मिल जाती है. So this is what a very small brief of what Krishna has said in Bhagavad Gita, and I would just end it up with a very small disclaimer that this is just what I have understood, or what I have realized from reading the shlok, and what my mother and my father might have taught me every time, and I'm just putting it up here in a very simple way for ease of understanding. But yeah, any person reading the shlok might have different interpretations. This is purely what I have understood. At the end, I would even just recommend everyone to read the Gita directly to understand it better from their own perception. Thank you.
Thank you so much, Nupur. That was great. And to start the day with this gyan and reality of life is really good. Thanks so much for
Thank you.
sharing with us.
It's a great auspicious start. Nupur, well done. You have indeed done an excellent start. It was your dream to have a series on Gita ThinkTank.
Yes.
And it's a wonderful sloka to start with. Now, hope you will be having a regular series through your short 3 slides PowerPoints,
Right,
and
right.
cover all the slokas throughout the a decade and throughout the century, so everybody can benefit and they can also contribute in a much bigger way in a real understanding of life. That is what the think tank is
Right.
all about. Professionals in a disciplinary platform contributing together.
Yes, sir. Thank you so much, sir.
Mr. Rakesh, you are trying to say something? Yeah. Sorry. Yeah. Okay. Thanks so much, Nupur, and then we can just move on to our next speaker, Manojji. Hi, Aishwary.
So first of all, thank you, Nupur.
Good to see you again.
So first of all, thank you, Nupur, for a wonderful start. Couldn't have been better. So moving on to the second presentation, today we wanted to talk about something which is more advanced in blockchain, as we've already done something on blockchain way before, and we have understood what blockchain is. Now today I wanted to focus my discussion more on the applications of blockchain, where blockchain is actually being implemented, and what are the real use cases that have been used in the blockchain space, and how these platforms, how these decentralized platforms are changing the way we all looked at business organizations, where we had a hierarchy of people taking decisions at the top. how those governance are reforming, how those governance are changing in a format where more and more people can now become a part of that governance method, and how we can decouple a lot of activities that are being done by traditional banks and everyone. So, with that thing in mind, let's start today's session on decentralized finance. Now, before I start, I always have a thought to tell people or to start with a good saying, which is like every time which I do. So, for this presentation, it's one thing that we all need to understand it, that it's like 1% of the people control the world, and 90% of the people are asleep. Why 90% of the people are asleep? They probably feel that the changes are either not coming, or they do, or these changes will not affect us. And that is why a lot of times we have to we go out and see that maybe the changes will be there, but we miss out because of that. And there's only 1% of the people who don't want these 1% who know everything. They always want these 90% people to not know how the changes are coming, so that they always stand in the category where they are and they cannot succeed. So that is something which is right now the current scenario of the world, and we need to go through and we need to understand that in order to become those 5% or those 4% who are seeing those changes and who are willing to tell 90% of the people that you can change and you can go for a better, is something that we should be focusing on. Now, when we talk about centralized or the traditional finances that are out there, these traditional finance, or let's say, I take the example of banks predominantly, because banks is something which is very much covered here, and banks are something. There are various things that are there in the banks, but there are a few things that are missing in the banks, and these things which are missing in these traditional finances is something which DeFi is trying to plug in. So it's not that the DeFi is taking over the traditional banking, or DeFi is going to take over the all the banks or the centralized finances and everything like that. But what is going to happen is a lot of people who are out there, who are there in this, or a lot of problems that are out there in this centralized finance, is going to be taken care by these decentralized finance applications. And we all know that the banks have not been like 100%, or these traditional finances have not been able to keep in control or keep in check all the things. That's why we see a lot of NPAs, we see a lot of things that are happening, we see a lot of losses coming in, we see a lot of bad loans coming in, and everything. And a lot of things that are out there, they take a lot of time to process. Like if I want to go out and if I want to make a payment, let's say if I have to make a payment from one place to another, if it's cross country, first of all, it takes hours or days, sometimes even weeks even. And after that, we have to incur a cost in it. And this cost is not something which is small. You almost end up, if you are someone from, let's say, the third world countries, you almost end up paying 13-14% as the transmission cost. Now for a person who is just earning a small amount of money, maybe a daily wage earner or something like that, for him this 13-14% cost is very much. And that is why these platforms are trying to eliminate the intermediaries in between, and they're trying to ensure that a lot of people who are doing these such kinds of transactions can do it in a faster format. So that is something which decentralized finance is focusing on primarily. So that is the first thing. Second is accessibility. There are around 2.3 billion people who are yet not into the financial systems, maybe in the banks or some other way in which they are either connected to these financial institutions, where they can either store money, move money, or do transactions through any payment or mechanism. So almost the 2.3 billion people that are out there, from these 2.3 billion people, almost two-third of these people, which is somewhere around 1.7 billion people, still have mobile phones, and these mobile phones are something which are connected to the internet. So if we can devise a way in which we can go out and we can cover these people without entering or without getting into something where we need infrastructure for a banking scenario or for a banking system, is something which could be very good to bring a lot of people and connect them to the financial inclusion. And the third is centralization and transparency. So even with a lot of laws and regulations and everything that were out there, we have seen a lot of global crises happening. In 2008, we saw this whole recession coming into picture. A lot of entities getting bankrupt, even with a lot of AAA rated bonds and everything which were there, they defaulted. So that was a question to the regulations and the authorities or the centralization, where people said that we are good under the law. So this is something again which is happening now under COVID. We are seeing a lot of decisions that are being made by these centralized organizations, which are hampering a way in which we store value in the form of fiat. So that is something which is primarily being focused on in this DeFi format. Now, when we talk about eliminating intermediaries in between, we can take example, a very easy example. Let's say easy example which says, let's say I want to pay $100 to someone every month for the next 12 months. So basically, I have to pay $1,200 to someone, and the only condition is that $100 should be going to anyone's account every month. Now today, if we want to do that transaction will can be done, let's say, by giving out a standing instruction to the bank. Now, even if we give the standing instruction, it's not always that your transaction will go through. Maybe at that point of time, the server maintenance was ongoing, so they can delay the payments, or even not delay the payments. These payments can not even go through sometimes. So that's one problem. Second problem is, let's say, if this is a bigger amount, we will want to have, let's say, an escrow account or a service of a lawyer or something like that, where they will be consuming a lot of money, a lot of charges that they will be taking from us. So that is also another thing where we are going to lose out money. And even with losing out money, we won't be able to 100% say for sure that, okay, this is something where we are 100% sure that we are going to successfully do those transactions. Now, when we talk about blockchains have a very good feature about smart contracts. Now, what happens in a smart contract? A smart contract is nothing but a condition where what you do is you just it's just like an if else statement, where you will just go out and tell that smart contract what are the things that you want to do. And let's say I just go out, and this is the transaction that I was talking about. I feed it into the smart contract, and now what happens is, and I post it and I deploy it on the blockchain. Now, the benefits of blockchain are basically something where it is immutable, so nobody can go out and change these transactions. This is something which has a proper audit trail, where we can see all the conditions that are being fulfilled. And the last and the best part about this is decentralized, and because it is decentralized, what happens is their fault tolerance goes up very high, where servers, bank servers, and all these places can go down every week, which happens every week for scheduled maintenance and everything. These servers which are out there being decentralized, they have almost zero downtime. So all your transactions that are being processed, they process near real time without any thought of going down into the picture. So that is something which a smart contract can do. And based on just this analogy, a lot of applications have started building on smart contracts. Now that exactly is something which we call as DeFi. Now, what exactly is DeFi? DeFi is something that allows to utilize the financial services like borrowing, lending, trading, etc., without the need of any centralized body. So today we have a lot of centralized bodies who are going to, among whom we are doing those transactions, who are allowing us to do all those transactions, who are giving us the permission to do all those transactions. So this is something where what is happening is, slowly and steadily with DeFi, we are going ahead, and all these things are happening, and all these things are happening through applications. Now, these applications are not something which is centralized, which is the best part about it. And because we eliminate a lot of intermediaries in between, the costing that is required, or the costing that is in there, that reduces to a very significant way. Now, what exactly is something that can be replaced? So today, if we have money in the form of dollars, euros, pounds, so that is being replaced by something called DAI and other such platforms. Then central banking that we have, like RBI, all these platforms. Now, these central bodies will remain, but smaller bodies which are controlling these kinds of environment are coming up into the picture. Like, for example, MakerDAO. Commercial banking which is there, so commercial banking, where we go out, we lend money, we deposit our money, we do our daily transactions. So those things are being replicated in platforms like Compound. Investment banking, where we go out and, let's say, investment banking, we have JP Morgan, Goldman Sachs. All the things that these people are doing can be replicated on the platforms like Synthetic. And the best part about all the platforms which I'm talking about right now, decentralized, there is no central person who is controlling it. It's being governed by the people who are holders of their governance, and that is how this platform works. So there is no one single person who can take the decisions overnight, change the way the whole banking works and everything like that. And that gives the power back to the people. It's not the bank having the complete or the centralized places having the complete power. This is where these parties or these platforms take the power back and distribute it among the people who are its stakeholders. Then, if you talk about exchanges, we have NSE, BSC, NYSE. Similar things are being done on the exchanges like Uniswap, UX, something like that. And then we have brokerages. So, brokerage houses which were there, that is also changing. Insurance, which is there. So, all these things, I'm not saying that they're going to be replaced, but this is something which where we are going ahead and we are creating an environment where all these things can work in a platform or in a way where the whole centralization is not there, but we still reap the benefits of all the products that are out there. The next one, if you talk about insurance, so insurance, we have platforms like Nexus, Yan Finance, Open. If you talk about payments, we have Argent, Coinbase Wallet, we have MetaMask, which is exactly like PayPal, Stripe. And then if you talk about asset management, so asset management is also something which is being done on blockchain in a decentralized format. So nobody is taking. So today, if you want to become an asset manager and if you want to deploy your funds, you can go out and you can be your own manager, and you can do that without asking permission from anyone. The benefit of this is it gives you an open market, so it removes all that entry barriers that we have in our traditional markets. And another thing is, whenever you are going out and you're putting out yourself as an asset manager, you have to show what exactly are the results that you're bringing. And because all these investments also happen on the blockchain, so the best is nobody is manipulate these. Now, like I was talking, so what I'll do is I'll try to explain some of the platforms that are out there in this decentralized format and how they are going out and how they are making this impact. So the first one is, let's say, for example, stable coins. So the one of the biggest problems with cryptocurrencies was that these cryptocurrencies were volatile. These prices were going up and down, and they were because of this particular thing. The problem was that we were not able to transact in these cryptocurrencies. So hence came the concept of stable coins. So stable coins are something which are pegged to the native currency, let's say fiat currency or gold or something like that, in which it's just like the duplication or the replication of what we have in the form of fiat or gold or any such assets. Now, the benefit for this is basically when we actually want to transact gold, or when we, let's say, I want to actually transmit fiat from US to India, now that's a very big problem. But when we talk about stable coins, these can be settled instantly. Within seconds, you get the settlement, and the cost of settlement is way low. So if today I want to settle $1 million, I can send this $1 million within 2 minutes, and the cost of transaction would be somewhere around $2 to $4. Now that is something which is very big sale. Today, if we are talking about this actual movement, actual physical cash movement, if you are moving 1 million cash, you need security for that. You need a whole infrastructure to move that money, and then also there is always a risk that this can be hacked. While when we are sending money through blockchains, this kind of a risk gets eliminated, and it does not care about the movements of the cryptocurrency markets, whether the cryptocurrency market is going up or down. And that is why the major stable coins like USDT, USDC, they have reached a volume of over $100 billion. And if you talk about 2018, in 2018, this volume was somewhere around $5 or $6 billion. So $5 or $6 billion in 2018, and now we are sitting in 2021. The volume has already surpassed 100 billion, and we are not even finished with the half year completely. So just half year has been completed, and still 6 months are yet to be there. So this is something which is showing how massively these are being adopted. If you have to make the settlements for your businesses, your business house, people are using these stable coins to make the transaction. If I have to, let's say, I personally, if I have to go out and I have to take any international service, I would not want that payment to go through five channels and reach me, let's say, a week down. I can get that payment within seconds, and then I can convert it back into my fiat currency and bring it back through my bank into my bank. So that is something which stable coins are providing. And this is something, these are stable coins are usually, like I told you, are backed by fiat currencies itself. So you don't have to worry about the fluctuations. Apart from that, some of the stable coins which are particularly in decentralized world, so they are backed by some collaterals of other cryptocurrencies. Like for example, if I talk about DAI is a decentralized stable coin. Now DAI has a backing of collateral of Ethereum and Bitcoin and back. So these are the three assets in the basket which are deriving or which are serving as a collateral. So there is no credit creation here. Anything that is getting issued, that is getting issued based on the security that is behind the system. The second is lending and borrowing. So today, if I want to go out and I have to, let's say, borrow funds. So first of all, I'm right now doing that. So what happens is you have to fill a lot of application, of a lot of formalities. You have to give hundreds of documents. You have to go out and give your credit scores based on which your credit is going to be determined. And then a lot of back paperwork and everything goes into picture. And let's say if you are someone who is taking a loan for the first time, even a bigger task and even a bad rate of interest. And what happens is, because this is something which humans are doing, humans make mistakes. And this is very much evident by all the scams that have happened in the past, and we are still trying to recover the money now. What if you just had one thing? I do not want to know what your KYC is. I do not want to know who you are. All I want is a collateral. If you have the collateral, you can go to these platforms. Now these platforms are like Compound. These platforms are like Aave. And the volume that they control today, the volume that they have today, the assets that they control today is something which is more than some of the PSU banks. Aave today controls over $18 billion in assets. Compound controls over $14 billion in asset today. And in the month of May, this was somewhere around $28 billion. So this is more than some of the PSU volumes or PSU assets put together. So this is something where these platforms are not new. These platforms are not something where they are just starting. They have taken the stress test as well when the markets crash and when there's a huge volume where all the centralized platforms were crashing. These platforms work very easily, and there was not a single problem that was seen in these platforms. So here, all you have to do is you have to put. I just want your collateral. That is it. If you have the collateral, you can just deposit your collaterals now. Right now, because these platforms are still very early, the collaterals that they take right now are in the form of cryptocurrencies itself. But in the future, what we are working through is digitizing the real world assets. And once that happens, you can actually go out and put your homes as collateral on these platforms, and you can take loans against it. And this is something where a lot of inefficiencies of these paperwork and everything that we were talking about, they go away. Another best part is the rate of interest. So these platforms are something which reset rate within 24 hours, and that is every day you will see a rate reset. Now, rate reset basically is beneficial for any person who is taking out a loan, because if the whole protocol, if the number of amount of loan that is being taken from the platform is something which is at a very high end, so it will completely be based on the demand and supply. If the loans are in high demand, your interest will rise. If your loans are if the amount of loans are low, your interest will reduce. And this is not just with borrowing, this is also with lending as well. So you can, and the amount of interest that these platforms can give out to you have ranged from 4%, 3% to 17 to 18%. So this is something which is even without getting into a lot. If you just want to deposit, let's say, your stable coins, so if you want to reap the benefits of just depositing money in the form of stable coins, there also you get a return somewhere around 7 to 8 up to, and they have given as high as 17% returns. So that's like just keeping the money in your saving bank's account but earning interest rate at 17%. With inflations today at all-time high, and yeah, like yesterday only, the inflation CPI index came out and it was somewhere around 6.7%. So that means that if you're holding that money in your bank account and if your FD rates are 5% or 3%, your actual purchasing power of that money is reducing. So keeping your money in these form without losing the value out there, because they're stable coins, and you can, and earning value from this is also something which a normal person who does not want to take the risks of the crypto market but who wants to reap the benefits out of it can do that. And that is why major banks like JP Morgan and a lot of banks out there are trying to go out and trying to use this kind of a facility. A lot of banks, they are exploring this, and they are tying up with these banks accounts. So for example, today in US, if you are holding your funds, you are getting an interest rate of 0.0%, and if it's a current account, it's 0%. What if that money which is out there, you can go out and you can put it in an institutional way, and that money can give you an interest up to 4 to 5%. So that's like a very big return for institutions who are just earning 0% interest. So this is something which lending and borrowing is taking care of. And then we talk about exchanges. So today we have these exchanges like NSE, BSE. Yes, they settle a lot big volume. But when we talk about these decentralized platforms, the biggest one which I know of is Uniswap. Uniswap has a daily volume in billions today. So it's not something which is holding just like a small amount, and these are on a daily basis doing billions of dollars of trades. So if I talk about Uniswap, they employ something called a liquidity market, and where you don't have, where it's not like the order book details that happen on a daily basis. Like in your NSE, BSE, you put out an order. If someone else is at the same order, if you're willing to purchase, someone else is willing to sell. And at that exact rate, what you want to do is, if that rates match, if your quantity matches, you can go out and do the trade. But when we talk about these exchanges, they do not employ this mechanism, and they employ the liquidity market mechanism, and also known as AMM, automated market maker mechanism, where what they do is, anyone who is willing to go out, let's say it's like lending your shares to these platforms, and when you lend these shares to this platform, the benefit that you get is, basically you get out something like a fee that people pay while they are using or utilizing your shares. So this is something which has also been started on NSE as well. A few shares can be today lent out, and you get a return, and then you get a certain amount of interest on it. This is something which is already being done by these platforms. And the highest volume that I remember, which has been recorded on Uniswap itself, is somewhere around $7 billion in a single day, where the platform did not crash, and it was able to handle all these volumes very easily. So that's about exchanges. There are other exchanges like Eco, Aave, Kyber Network, Request Network, DYDX, Nuo, 0x, or ZRX, or Compound platform. The next is derivatives. So when we talk about derivatives, so derivatives is something where the traders use derivatives. Why derivatives are used? Derivatives are used to hedge their position, as a hedge by the traders, to increase or reduce their positions of risk in a particular trade. And derivative contracts are mainly traded on centralized platforms. There were no decentralized platforms out there till yet, but now these platforms have started to come into picture, where what you can do is, you can buy these derivatives in the and the platforms like Augur, platform like Open, platform like Nexum. They're going and giving out these conditions or these derivatives to you, so that you can go out and you can trade into these derivatives. So another market which was very highly centralized and was under the control of these centralized bodies is going out and creating its market of its own. The next is fund management. Today we talk. So there are two types of people who are there in the fund management. One is active fund management, and another one is passive fund management. So active fund management is something where people go out, and in the form of active fund management, what happens is, you are going out and you're giving out a money to someone who is going to actively invest your money into various things that he wants to, in order to derive a return which is more than the benchmark returns. So benchmarks we can talk about, let's say S&P 500, Nifty 50, and all these things. So these are benchmark rates, and the work of active fund manager is to bring out returns which are far greater, or which are more than this. So this is something which active fund management does. And how do they derive their revenue? So if they earn something which is more than these index funds or something, and from there they charge a fees to you for the services they have given. So this is active fund management. Passive is where you deploy some strategies, and the return that you want to get is basically maybe equivalent or at par to these indexes which are out there, like S&P 500 and Nifty 50 that I told you. So people want to get these kinds of returns here, where they will not invest actively into the market, where they here in passive investment, passive fund management, they will have their strategies developed, and through those strategies the money is going to automatically be invested into things that they are taking care of. Now, when we talk about this passive fund management and active fund management, we hear a lot of people investing through mutual funds. Mutual funds is something where you just buy a unit, and whatever the underlying strategy is, based on that underlying strategy, the fund managers are going to go out and buy various equities and whatever they have promised you to buy on the for the money that you have put in. And if the prices of those investments go up, so does the value of your, or the NAV of your assets go up. Similarly, in the decentralized finance, what happens is this passive fund management is very much active today. We talk about platforms like token sets. So token sets is a platform where you can just go out and, let's say, if you don't know where to invest, how to invest, or what exactly is going to be the best way, or which is going to be the best token to invest. Now, these places, what they do is they have given out three strategies. So one is where it's like robo advising, where they have exactly like duplicated some of these strategies, and based on that, let's say someone a strategy is range bound. So if the prices are coming at this at a particular lower range, you buy it. If the prices rise up and reach this place, you sell it. So that's like a range bound. So that is what these robo tradings do. So you just buy a unit of them, and then based on this strategy that they have given out, they will go out, they will buy and sell on your behalf. That is the first thing. The second thing is where you go out and you create social sets. So, for example, let's say I'm a very good trader, or I am someone who has a very good record of bringing out returns for you. So, if I'm someone who is ready to bring out returns for you, then what I will do is I will lay out my strategy there, and based on the strategy that I've laid out, the money that I want to deploy, if people feel that yes, this person can go out and bring returns for you, then this is somewhere where you can just go out and you can get those kinds of return. I can even show all these platforms if you want. Give me a second. I can just open this platform for you as well. So this is token sets, where the asset management that I was talking about, I can just go out and I can click on explore sets. So it's exactly like doing your mutual fund investments, where you can see what are the sets that are available on the platform. And based on those sets, you can go out and you can invest into these sets. So these are various sets that are out there. So I told you about the robo sets. So robo set is somewhere where they are going to copy an index. So here this is like an index where they're going to copy the strategy of this index. So that's the first one. The second one was, I was telling you about social sets. So if someone is like, this is a social set, which is a quant, where you can go out and you can bring out returns based on that, based on someone's skill sets, and why they will go out and invest your money. They charge some a fee for doing that trade. The third one is portfolio, where what will happen is they will not just invest in one thing. They will go out and invest in multitudes of assets. So let's say, for example, today the cost of one unit here is $262. So if I invest and I buy one unit here, what will happen is they're going to invest my money into these platforms automatically. So here they have given out what is the ratio of investment. So here you can see that is the ratio of investment. So that is how you will go out and you will be able to do this investment. And before I was talking about lending and borrowing, let me show you that as well. Yeah, so here you can see right now the platform that I told you about, Aave, it controls somewhere around $18 billion here. If I talk about Compound, I can just show you as that as well. So they hold a huge amount of money, they hold a huge amount of governance, they will hold a huge amount of assets under them. So here you can see almost $14 billion. And here the interest rates and everything that are out there. So if I want to just go out and I just want to see what are the various interest rates at which I can go out and earn. So here you can see even the interest rates that are out there. So all these assets which you can supply, and this is where you can get these returns out there. And so this is how you can also go out and you can bring out your returns without being actively trading into your market. These are the ways where there is no central person who is controlling this. All this is being controlled by people or by individuals who are out there. And this is the best part about this particular investment. Now the next one is payments. So today when we talk about payments, so payments is something, let's say we are from the professional world, and sometimes what happens when we are starting to take take on a new client. So when we take on a new client, what happens is at the time of taking on a new client, we have to either trust him that he is going to pay me the money, or what I will have to do is I will have to ensure that the money that they are going and paying is something that later on when the services are done, so where later on when the services are done, they actually go out and pay you for this. Or let's say if you are someone who is sending out goods, so you have to either take the support of banks to ensure that you're getting those payments, and then again a lot of cost gets involved. Here, what happens in the form of payment platforms, in the form of payment platforms, what you can do is you can go out and you can set out a timer. So, for example, like we stream videos, we stream music in these platforms which are payment related. What happens is you can go out and you can stream money. You can set out, let's say I want to give a service for 1 hour. I will just go out and I will set out the time that okay, this is the 1 hour that I want to go out and I want to give the service. The person who has to pay will deposit the money into that platform, and as soon as my consultation is going on, every minute I am accruing that payment. So let's say if I am giving out a service for 1 hour, the best part is I will get paid for that 1 hour because you cannot stop it in between. And let's say if you get a service which is less than an hour, so you can at that point of time, if you have promised to pay for 1 hour and you get a 30-minute service, then you only pay for 30 minutes, and the balance funds which are out there, you get them back. So this is also something which is getting very much traction. This is where a lot of companies in Japan or in third world countries, they are trying to implement this solution. Why they are wanting to implement this solution? The basic is because of the daily wage earner, where they're able to make these payments to daily wage earners in a very regular fashion. Why they want to do that? Because what happens is these people who are earning on a daily basis, if they are not able to transmit money, let's say within time, what happens is they lose out. These people have to go out and take payday loans. Now, when they have to take payday loans, these payday loans are not given out by banks. These payday loans are unsecured loans and can hold an interest up to 40-45%. Now, if they hold an interest rate of 40 to 45%, that means if that payment cycle has been vastly improved by them. Why? Because now you're going to go out and now you're going to have to pay the interest along with your principal. So they go and get it themselves into a debt cycle. So in order to save them from these debt cycles, in order for them to receive the payments on a regular basis, is something where these payment cycles are working on. And the best one out there is Sablier. So Sablier is a platform that ensures this, where you can set out your consultation services, you can set out your payment services in the form of a streaming line. So these are the various platforms. When we talk about decentralized finance, they are growing. And then when we talk about codes, the biggest problem or the biggest threat that we have is, what if tomorrow these platforms get hacked? What if tomorrow we go out and we lose all the value that we have deposited here because there was a hack, or there was some kind of a problem in the code and the code collapsed? What happens then? So that is why insurance is also something which is very much important. What if someone who has made the contract dies and he takes away, or he takes the password and the keys which are out there along with him? What if he does that? So if this is something which is going to happen, then you won't be able to retrieve your funds anymore. So that is why we have insurances in this sector, and which play a very important role. They would safeguard you from all these kinds of losses like hacks, or maybe delays in the payments from exchanges, or maybe let's say if someone loses funds, and all those problems that you can possibly think of. So Nexum protocol, Open, or are these platforms which are giving you a decentralized format of insurance. So there is no one who is controlling, there is no single person who is ensuring that your claim should be processed or not. There are more than 100,000 people who are ensuring that your claims are settled in a way so you cannot manipulate them. That's a very good thing for insurance industries, where what happens is a lot of time we can manipulate the assessor who is coming in to get in some more money, and they get a fair compensation because it is being evaluated by way large members than just 5 or 10 people. So that is something which is there in the insurance. So this is something which happens in the insurance. So if you talk about the whole ecosystem of banking, which was being out there, we can right now see that today all these platforms are trying to come into picture, and they are going ahead and they are creating the value which was being created by the banks. If I see about banks, except for the locker services, what exactly are the other services that cannot be replicated? While lockers cannot be replicated because they are physical, I cannot replicate a physical thing with a digital thing. But yes, if I have to keep my money, I can keep my money here. If I have to go out and I have to lend my money. If I have to borrow, I can borrow my money. If I want to take an insurance, let's say from my bank, that is also available. If I want to go out and take any other services out there, then I can do that as well. Vaman, do I have a question? Okay, so this is something where you can go out and you can do all those investment related things here as well. So this is something where we are going out and we are seeing that the whole ecosystem that banks used to provide us, these platforms are trying to provide the same facilities in a much better format, in a way where you can go out and you can do all these things maybe at 2 a.m. at night, and there is not going to be a server maintenance. You don't have to incur such large costs out there, and you can do those transactions in a quicker format. Now, this is something which I wanted to enhance, or I wanted to enlighten in the form of decentralized ones. Now, when we talk about the next question, are these platforms going to take over all the centralized systems and these centralized systems are going to go away? The answer is no. A native person who is out there won't be able to navigate through 10 different platforms, and he would always want someone or the regulations to take care of all these problems out there. So these platforms today, which are right now working as decentralized, are going to ultimately connect with the centralized platforms, and there will be something called a CDeFi, which is centralized decentralized platforms. So all these platforms are going to create those kinds of efficiencies which were required in the banking system, and that is why these systems are very much required. So that was all about how decentralized platforms work. And just before I conclude my presentation, there is something which I want to go out and tell. So before, let's say I've talked about various platforms here. So there is a thing that you have to explore. There is a thing that you have to ensure on these decentralized platforms, which is like a lot of people will today connect with you. So if you are on your social medias, most probably either you would have already been you would have already seen it, or in future you might also see it. Which is like if someone is coming out to you and saying, "Hey, you don't have to do anything. We can mine Bitcoin from your wallets, and you just give me your password of this wallet. Set up your wallet in your mobile phone, and give me the password. So I will go out and I will reset all these things, and I will set it up in your mobile phone so that you can earn Bitcoins." Now, this is a scam where where some such thing is not possible. Why? Because you cannot just go out and you cannot just mine Bitcoins on mobile phones anymore. And then this is something which is going to happen. And the next thing is, let's say there are if you're investing into something, you have to go out and you have to ensure that you take the questions of you take into consideration some basic points, which is like, for example, if there is no white paper. So white paper is where you go out and see what exactly is the project all about. And if there is no white paper, if there are members you do not know who they are, or they have no no personality or no profiles out there in the public, so that is something where you don't invest. And then there is no tokenomics. So tokenomics is basically the micro study of how these tokens behave into the whole world of tokenomics. So that is something which is known as tokenomics, and tokenomics is only something which helps you determine whether you should be investing into a product or not. Most probably, I'll be covering tokenomics maybe in some other session in future, because that would again take somewhere around an hour or so. So with that, I will conclude my presentation today. If you have any questions, you can go ahead and ask.
Hi, Aishwary. I first of all, I would like to say that like I really loved your presentation because it clarified a lot of things which I didn't know about crypto. So I'm really fascinated by the blockchain technology, and I feel like it is something that is going to be the future. But while investing money into any of these coins, I'm not really sure what I'm buying. You're getting me? So like if I'm buying shares, then I know that I'm buying these companies, that I am like, there's something physical that I'm buying. Some, like, a company is accountable for it. But let's say if I'm buying these coins, then I don't really know what I'm buying and on what basis do the price fluctuate. It can fluctuate even on the basis of a tweet by Elon Musk or something like that. So like, very volatile is something that I feel.
So there are two questions that you have asked. The first question is comparing it to equity market. So this is something which a lot of people do. They compare it with the equity market, while this is something which is not an equity market. The reason why I'll say is, if you are going ahead and you're investing into these projects, it's not about investing in a company. It's more like investing into the monetary policy of that project. So for example, let's take an example. I'll give you an example which whereby you will be able to understand both the questions very easily. Now, when we talk about any particular cryptocurrency or any cryptocurrency project, these are microeconomies, and you have to compare it, let's say, to an economy. Let's say I want to compare it with India. So let's say India is an economy where what happens is we are doing those transactions in the form of what we are doing the transactions in the form of fiat currencies that we hold today. Now this is something which most probably would be explained by tokenomics. So tokenomics covers this, but let me give you an overview. So today when we hold INR, what exactly are we holding? Are we holding a part of Indian monetary system? The answer is no. Are we holding anything which is having a backing of any gold reserves or oil reserves? The answer is no. We're just holding a promise in our hand. We're just holding a faith. Why I say that? If you remember demonetization, on one night just before 9 p.m., if you were holding that 500 rupee note that had value into it, and if you could have bought things with it. The moment it said that we are no more using these kinds of notes anymore, the trust of the people just fell to zero, and hence they were of no use anymore. If we after that also held trust on that note, we could still have used it, but we lost trust on it. So all these cryptos also which are out there, let's say if I talk about any cryptocurrency, like for example Ethereum, so that is like an ecosystem of it itself. Now in India, if I'm making the payments, if I'm doing any transactions, I'm paying in the form of INR. If I'm doing any transactions on the platform of Ether, I am paying that fees in the form of Ether. So compare INR with Ether, not any company share with Ether. Why? Because they are not comparable. The comparison is between an economy, because India is a microeconomy, a macroeconomy, and these platforms are microeconomies in itself. And another example that I can give you is, let's say you are going out and there are two grocery stores in front of you. One grocery store is of Reliance, another grocery store is of Future Bazaar. Let's say they have not merged yet. So today, when you go to Future Bazaar and you, let's say they are running a scheme which says, if you invest 10,000 with us today, we will allow you 1,000 rupee free shopping for the next 12 months to you. Now this card is holding a value of 12,000 rupees, but if you take this card and if you take this card into Reliance store and you want to make the payment, that will not be possible. Why? Because even though it has value, where it has value, it has the value in the ecosystem of Future Bazaar, not in the ecosystem of Reliance anymore. And in both the cases, that in the both the examples that I've given you, both are not holding any shares, both are not holding anything. They are just holding the promise that yes, you can use this to make the payments, to do the transactions. So that is where this whole separation goes into picture. It's not comparing equity shares with crypto markets. That's not the comparison. And the second question that you asked was the fluctuations. So let's say tomorrow, and this is something that I want an answer from you. If today night, let's say our prime minister comes in and says we do not accept INR anymore, and from next week all the economy will be running on US dollars. So now if you have INR, you can now go out and you can convert your INR into dollars. Now what will happen to dollar? Will it remain stable at 74, 75, 76, or will there be a very massive movement in the price of dollars? Because we are just saying we are moving $5 trillion from INR to US dollars.
Right, but here we have a reason, right? We know why it fluctuated or the reason. But like many of the times we don't know the why the reason Bitcoin goes down or like Ethereum goes down. It's just maybe because of a tweet. Like we call it a decentralized system, but we see
Those
that like a single person is dominating as well at times.
this is imperfection in the market, and this happens when we are there in the early days of any market. And if you talk about stock market, or if you talk about gold, forget everything. If you talk about gold, when gold started, there was no value to it, and the adoption was increasing. So what happens is when a lot of these things happen and people do not know about it. Now, if you, let's say, understand what how these markets work, then you will be able to take a decision based on your thought process and based on your whatever thoughts you have. But right now, what happens is more than 80% or 90% of the people who are investing into cryptocurrencies are just investing because they think that their money will be doubled. And that is the only reason why they're investing. So now what will happen is if you're investing just because of this, what will happen is if you will see influential people, a lot of people are influenced by certain dignitaries out there. And what will happen is if they say we are doing this, you will go out and do it. And then there will be a demand in that. So this is something which is inefficiencies in the market, which can be reduced once the regulations come in. Where, like, if you remember, Elon used to do that with his own Tesla shares. He would go out and someday he tweets out that I think Tesla shares are overpriced, and suddenly 20% or 15% the prices would crash. So it's not that which is there in the crypto market. It was there in the equity market as well. But then what happened? Regulators got hold of him, and he was asked not to do it. He had to pay hefty fines, but these regulations do not exist in the equity market. Now, when they in the crypto market, so when they don't exist in the crypto market, what will happen is you won't be able to go out and you won't be able to do such kinds of transactions, and you won't be able to stop them from happening. So once regulations come in, yes, these will be taken care of. But right now, these kinds of things will happen.
Right. And one last question: is this a good time to invest in cryptocurrency, or like would you recommend any?
Give that advice basically because of my employment. I'm not allowed to give these advices. I'm governed under the Switzerland laws. So under Switzerland laws, I'm not allowed to give you that. So if you can invest or not, I can tell you what a project is all about, but I cannot let you give you a call where you can invest or
Okay, okay. Thank you so much.
not. No problem. Anyone else has any other questions?
Hello.
Yeah.
Hello. Hi, Aditya. I'm Dhaval here. I just wanted to check with you one thing. Like, how long you think that these things will come into the picture? Like, right now it's at a very beginning stage, but maybe next 5 years, how you think that these things will evolve? Because right now the things I understand that it's a beginning thing, and quite a lot of economies are against it. Like US economies feels like it might overpower the US dollars. Like it's the one of the central currency which has been dominating over the years, like for trades and everything. So that was one of the question from my side. Like,
So how much time it will take? Most probably it is still, we will still see 5 to 10 years where we will see the mass adoption. Why? Because first of all, we need to see regulatory clarities, and governments know that you cannot ban, you cannot remove these things from the face of earth. The reason being, these run on the these all these things run on the internet. So either you stop the internet
correct.
or you have to be a part of it. So if you do something like that, so they are not going anywhere. Most probably, once they are regulated, we will see better price mechanisms out there. We will see more people getting into it, and we will see more investments into it. But the time horizon that I personally feel is somewhere around 5 to 10 years.
Oh, okay. Yeah. So basically, the main intention was, I was deciding myself whether to go into these things right now or better let it get bit evolved. And then when everyone will be there, everyone will be knowing. At that time, we can participate. Like,
Only what happens
thank you.
is
It was a nice session. It was quite informative.
when you go out and invest in a later stage, it's just a game of risk and reward. If you are ready to take the risk at the start, you might lose all the money, but you might also get fancy returns. If you get into a place where these are very well established, the risk reduces because these are established now. And if the risk reduces, so does your reward. So that's something that you have to decide. whether you want to risk that much amount to get the kind of rewards that they are promising to give, or maybe lesser returns but safe bets.
Correct. No, but right now you will see, like, the last question which you answered, that cryptos won't be affected by any tweets or this. This is also bit of evolving. Like, you will see when the Elon Musk entered, you know, it impacted. Like, I just take an example of Bitcoin. It went to around 50 lakhs. And then, when he removed, and then China recently, like China, stopped mining and all those things, is down by half, like 50%. So that's what the thing, like, when these things got out into the market, when basically the retail investors come to know about it, the things, like, they are the one who has faced these things. Like, that's why, I don't intend, like, at the beginning stage, to really go into it.
That's so cool. Yeah, but these things will settle down. So if you see, the tweet impacts have reduced. So earlier that would make a huge impact, but now they are reducing because now people are understanding people. So if you invest, see, the best way to learn. I'm not. This is not investment call. I'm just saying, if you invest something, what happens is, if the prices start to fall, it will teach you more than what you can learn from all the paid courses out there, because that's your money falling. So if your money is falling, you would go, you would want to know why exactly this is happening, what is happening. And this is the best teacher I have seen so far in my life. It has taught me a lot. Why? Because that is how I started learning about what money is, what monetary policies are, and I'm ready to debate on those things with even people who are sitting at very top places because of this reason only. And that is something where, if, let's say, I will not talk about whether it's gain or loss, but knowledge definitely is something that you gain.
Yeah, correct. No, I'm very optimistic about these things, because these things are going to come on tomorrow in the market. That's for sure. Because this, not even, I'm not talking, cryptocurrencies might not last, but there will be, with the regulations, the blockchain, basically the blockchain will come into the picture anytime. Even I just heard that Walmart is using a blockchain technology only, but that's for a different purpose. That's altogether a different thing. But I am damn sure that these things are coming into the market in next 5 to 10 years. Yeah. Okay. Thank you, Aditya.
Anyone else? Okay. Manoj sir, I think I've answered all the questions. No, someone raising its hand later. Okay. Any more questions? Last chance.
Acha, Aishwary, okay, I was just wondering whether to ask or not. Dushyant Shah here. See, the thing is, as you said, that these cryptocurrencies cannot be compared with the equities. Now, these both are governed by two separate set of rules, if I would say. Equities, the company share capital is sort of known or limited. When they increase it, they tell everybody, the AGM passively approves it and all that. So that how many shares are in the market or in the available, and what is the company's business. And you take maybe you can say calculated risk, or maybe you say a little more of risk. If some company is doing well, risk element is less. If company is not doing well, but then you bet on the future and you buy the shares. In the crypto, like what you bank upon, like number one is that demand supply. I mean, the prices are demand supply based, but how the supply is determined. Like, say, bitcoins are being minted. There is a some rate of minting, and they are going to be minted up to a certain time and all that. But what about all other currencies? Like, so number one is that everyone will understand that it's a more of a demand supply function. But then what is the basis for determining the price, and what is the basis that the price will remain there, or may go up in a certain way, or may not go down in a certain way? I mean, there is some logic available. Risk is always there.
So that if we understand how to invest, etc., then you can replicate that those things also. So this is something what happens is whenever you are going out and whenever you are investing into all these things, there is something called tokenomics that works here. So tokenomics, so whenever you're going to invest or whenever you're going to look at any particular project, these tokenomics are something which are going to give you this data. So tokenomics, let's say if you talk about Bitcoin, Bitcoin's tokenomics says that it is going to be minted up to a certain extent, which is 21 million coins. And every 4 years, the number of the supply that is coming into the market is going to be halved out. So that is for Bitcoin. If you talk about, so every token has this kind of a tokenomics. And the best part is all these tokenomics are something, let's say if I today a government wants to increase the amount of supply into the market, so they don't have to go out and ask permissions for anyone. They can simply go out and do it. But here what happens is there are governance protocols happening here. So let's say if there is no central body who is taking the decisions or who is ensuring that the protocols run properly, so there has to be a way in which you can go out and you can govern. So all these protocols, so they usually have something called a governance token as well. Now these governance tokens give you these rights. The governance tokens, like if I talk about Uniswap, there is a governance tokens for them. For Compound is, there is a governance token called Maker for that. So all these places, they have their governance tokens. Now what happens is with that governance token, the people who are holding those tokens get a vote. So if you, what will happen, let's say I feel that this protocol, I don't belong to this company, I don't belong to this protocol, but I have a very good idea which can help this particular protocol to enhance or to bring out better results, or let's say a good marketable venture. So what I will do is I will openly go out and I will pitch this idea and in the form of an improvement protocol. And this is with all these decentralized platforms. Once I've pitched it, what will happen is those governance holders, and these governance holders are not one or two, they would be, let's say, in thousands or lakhs. Now what happens is when they will see this, if they feel that this is something which can be done, which can be evaluated, what they will do is they will ask me to give a detailed layout how I can make this possible. And then what they will do is they will put it out to vote. So that is how that governance, if I have to upgrade, let's say any, like in software you update your software, here again what happens if you have to upgrade your software that way. And then these governance tokens, because these governance tokens are creating that value. So let's say if I give out a new method in which we can earn more revenue for the protocol, what will happen is the revenue that is coming into the protocol, that will increase the value of these governance tokens. So if you will see the price of Maker token, it initiated with $100, but with more and more business coming into it, like I told you, they have billions of dollars under management from where they are earning a lot of money. And that is how you control how, or how, that is how the value increases for that token. And let's say the utility tokens are out there, so which the other tokens through which you are doing those transactions, those supply is also brought out in the governed format. You cannot just abruptly go out and say, okay, tomorrow we are going to increase this kind of supply. And so every white paper, every particular company's, every particular cryptocurrency's white paper is going to mention. With this being said, 90% of the cryptocurrencies have no value. And within 3 or 4 years, what will happen is they will go down to zero, because they either do not have a business model, or they don't have a proper token model, or this is something where they are creating a use case which was not needed in the market. So this is why once you deep dive and once you understand how this token economics works, is something, then you will be able to understand. Most probably by next week, my publication on tokenomics is also being published. So I will share it in the group so you can go through that as well, which will give you a very fair idea about how a particular token is valued.
Okay, great. Thank you.
Thank you. Okay. Anyone else? Aditya, I think we can move to the next topic.
Yeah, Dushyant?
Yeah.
Yes, let's have a great interaction ahead on the markets, lots of developments. It's a IPO season. Huge money coming in. People are talking about over 3 lakh crores coming. Have some insights from you on what's happening on the capital market, latest developments.
Okay. So
And it is good. Today we had a ThinkTank mentorship program, young professional series two young professionals who have benefited from the ThinkTank mentorship program, Nupur, Kothari, Aishwary, Gupta. They are doing their best. They do a lot of studies as per the think tank mentorship program, and then come out with insights on latest topics. Nupur Kothari did excellent gyan on the Gita, the Shlokas, Karma Yoga, wonderful. Aishwary has been studying as a young professional as per the think tank mentorship program on various technologies and tools, and is coming out with lots of developments. Young professionals benefit from interaction with seasoned CXOs like you, Dushyant. Have some insights from you.
The thing is, okay, I think whatever I will say will be, will be pale against what Aishwary has covered. He has covered the topic wonderfully well, and it took us to the totally, different world, I would say. So I will bring you all to the normal, our present world, so to say. So before I talk about the new issue, which is coming, running this Tatva Chintan Pharma, which is already started, opened yesterday, I will talk about this Zomato, how the issue has performed in these, IPO 3 days period. The total
Right,
over.
Dushyant, yeah, Zomato as a talk of the season. And Aishwary, are you ready with your live charts? You can come out with some live charts as requested. We will cover after Dushyant covers. Be ready with some live charts, including Bitcoin, including the indices on Nasdaq and Dow, and some on request. Yeah, Dushyant.
Yeah, so Zomato has actually stolen the limelight in the sense that after getting 35 times the bid for the anchor investors, the issue yesterday was oversubscribed by something like 38.25 times, 38 times, so to say. There's a huge oversubscription considering the overall issue size of 9,375 crores. The qualified institutional investors, that segment has been oversubscribed something like about 52 times, whereas HNIs, non-institutionals, is about 32.96, so say 33 times, and the retail investors close to 7.5 times. So that's a really huge confidence has been put in this particular issue by various group of investors. Now, just to think about it, a lot of discussions are happening on the valuation of this Zomato. And today I was reading one article. That article said that this particular issue valuations has divided the investor community into two. Exactly divided from the middle. So very big investors are not favoring this kind of a valuation. But the fact is that the issue has been oversubscribed by something like 38 plus times. So apart from certain views, now I try to understand why so many investors would have applied for this public issue. So what people see in this particular company and company's business model, that couple of things which I could try to understand was, one is that they are in the food delivery business is fine, but they are in the business of changing the behavioral pattern of the Indian households. That is what I think is what has appealed to a lot of institutional investors, that the food habits are being changed by this particular business. Now, traditionally, all Indians were eating, at home, having home food only. But gradually, the restaurants and then the theme restaurants business have started. And after these food delivery platforms, which have come like Zomato and Swiggy and all, the youngsters have also given thumbs up to them, and more people are now eating the food, ordered from outside. What the investors have sort of bought the company's argument that the penetration as of now is something like they have got about 40 million customers, which they expect that going forward, maybe in the next few years, it could reach maybe 200 to 250 million investors. That is about 20 to 25 crore people, and the average order
which is about 2 to 3 per customer, also they feel that that the ordering pattern also will improve and may go up to something like maybe 8 to 10 orders per month, which is 2 to 3 per month. They also expect the average order size to also go up from around average of 300 rupees to something like 4 to 500 rupees, because in US the average order size is about close to $40, which is something like 2,700 or so, and Indian order average size is $4. So they feel that it also will be improved. So the revenue will come, number one, from increased orders, increased order size, and the total customers, new customers, they will acquire. So I think this big picture has been bought by these investors. That's what I feel. So that's so far as the Zomato is concerned. Now coming to Tatva Chintan pharma companies. Possibly, I think my understanding is that after IT, pharma, and the next sector which is getting a lot of prominence is specialty chemicals. And this company belongs to that category of specialty chemicals. Now, as per the reading prospectus and the couple of broker notes which I have read, the company is in basically having the following broad categories of specialty chemicals. The one is structured directing agents, which is called SDAs. The second category is phase transfer catalysts, so PTCs. The third one is electrolyte salts for supercapacitor batteries. And the fourth one is pharmaceutical and agri-chemical intermediaries and other specialty chemicals, which is PASC. Now, these four categories, they are doing business in, but I think the first category, which is SDA, is having a much more business overall in their overall composition of the business. Now, issue price is, I think, issue price is 1,083. This is on the upper band. And the valuation, if one has to go by, I would say it is quite competitively priced, even though it looks on the higher side. But if you look at the peer companies' prices, then you will see that it's a more of a competitive price. Say the competitors are Aarti Industries, which trades at about 60 times its FY21 EPS of 14.4 rupees. Whereas Navin Fluorine is trading at about 78.4 times for its FY 2021 EPS of about 49 rupees. Alkali amine and chemicals is, it's trading at 101 times for its EPS of 37.1. And Vinati Organics trades at 74.4 times. Its 2021 EPS about 26. Whereas this company has earning per share of about 23 rupees and is EPS is something like 23 or 26. Sorry, EPS is 23.6, and which gives a PE of about around 42. So comparatively, if you see the other industry, peers, which their prices are as of now, this is a competitive price, neither too high nor I would say low. Definitely, it's not low, but not high as well. It's a competitive price. So one can take a view, overall view, based on what is the present, trend in the market, and what is these companies' future business growth potential and things like that. The company is going to utilize the total proceeds in furthering the business. They would like to invest, about 140 crores into expansion of their Dahej facility, and something like about 30-40 crores in the R&D expenditure at their R&D facilities at Baroda. So they are not going to use this money for repaying debt. So that is something, a plus point, I would say, that the money will be invested for the furtherance of the business. The offer for sale definitely comprising about 275 crores will definitely go to the promoters. company will get something like 225 crores from its IPO. So this is all this overall picture of this new issue, which has already started on 16th, that is yesterday, and it's open up to 20th. But as a word of caution, as usual, that everybody should do their own study and do due diligence before deciding to invest. Thank you. Yeah, Manoj.
Wonderful thoughts to wonderful IPOs, huge fluctuations in gray market,
Yeah.
new models, Zomato, which has stunned everybody with their success and bringing a huge pipeline of startup companies and loss-making companies to try the luck before thousands and millions of investors. Getting money from private equity is a different game where there are limited investors. Now you have sharp investors among FPIs, you have sharp investors among the DIIs, mutual funds, HNIs and retail, and they making a beeline. This is all thanks to the excellent regulations of the Indian regulator, Securities and Exchange Board of India, which is known as among the best regulators in the world. It is giving an opportunity for participation to mutual funds, DIs, HNIs, and retail investors for participation in the stage where companies are in investment phase and growing, which was not available before, which was, of course, internationally available. Everybody knows about participation of savvy investors in Teslas and Googles and Facebooks and Apples who have been innovative. Now there's an opportunity for HNIs, mutual funds, FPIs, retail also to apply, even with just about less than 20,000 rupees, and participate in a successful startup with a brand value. When it will give dividend is a question many are asking. Will it give in next year or 3 years or 5 years or continue growing? And will it give appreciation? Of course, it's a listing game. People are talking about, there are some mutual funds which says compulsory selling on the first day, profit or loss. Is a new way? Should mutual funds be allowed to invest without looking at business models and sell on listing? Do some mutual funds look at gray market and sell on the first day, while the QIP investors cannot sell on the first day? There are some limitations. Anchor investors. Why there is a beeline by anchor investors? How many times anchor investors are done? Those figures are circulated before the first day itself. Of course, retail investors, as many people are saying, they wait for the last day, 3 p.m. numbers. It is over 2 times, 3 times. Let me try my luck and get part of the money, which is people are talking about in social media groups, 15 rupees, 10 rupees, which falls to 7 rupees. And then there is a beeline when retail category goes from 7 times, 10 times, 20 times. The gray market people are talking about again in 2 digits.
But this time,
gray market, yeah.
No, this time actually, the this issue, the Zomato was oversubscribed the very first day, which doesn't happen in many cases. But it was oversubscribed more than twice, first day, and the retail category was also oversubscribed on the very first day. Normally, it doesn't happen. As you said, they wait till the last day, but this was not the case here. And as you get some more details, as I was reading today, the total, whatever people, applicants, they more than 25% or 30% are 25 years and below. So about 27 to 28% people are age 25 and below, and 60% applicants are age 30 and below.
This is interesting. What has happened? What you
Yeah.
talk about age 25
And
and below, age 20 and
Manoj, one
below.
more interesting thing, as they say, Zarota and all they have shared, Paytm and all they have shared, that 25% of the retail investors are applying for the first time. So you can imagine that this 25% must be the class of that age group 30 and below, because there that is 60% of that age group, is comprising of the total applicants. So you can see 25% are applicant first time. So
That's a very interesting thing. Let us have some views of young professionals, some what young people did. A whole college took advantage. They downloaded the app of the company which did IPO, and everybody ordered food at over, I think, 50% discount. One of the persons participating in this group regularly, he said he ordered a biryani from Bhagat Tarachand to delivery at his house in Nepinsi Road, and it came from Kalba Devi in 40 minutes. A 250 rupees biryani he got for some 110 rupees.
yeah, so they're happy.
And this is a sharp investor, but a whole college has ordered a bag full of food on the first day, and they want to do it regularly as the scheme is on. Uh, uh, Anybody has any views on Zomato who has applied and the expectation? Feel free to share your thoughts. And Aishwary, you are here?
Yes, sir.
Aishwary, young professionals, what's your view on Zomato? Do
Sir?
you order the food? What's your experience about the food?
So I've ordered food, but I've not applied for the IPO because I myself don't feel that it has that kind of a value that they're promising of. So I have myself not invested. Yeah, food I do order with it, but a loss-making corporation which has no way in which it can. So their highest orders were in the month of December in last 2020, and even in that month they were in losses. So there is no way that I particularly feel. So this is something which might also happen. So what happens is when the early investors come in, they give in this clause, which is like either you help us exit, and if you're not able to help us exit, you have to take the IPO route to help us liquidate our investments. So this could be one of the biggest reason, and one of the third disadvantage that I particularly feel is once you get regulated and once you are under SEBI, you are not allowed to do a lot of things. You are properly regulated. While on the other hand, there is someone who is sitting with very much money, is still having the whole control over themselves, who can destroy you, because ultimately you have to make profits. And the moment Zomato stops all these schemes, because they would want to go out and bring profits, because yesterday I was seeing there was even a fund house which is basically investing into dividend yielding into shares, and that fund house is invested in Zomato. I don't know what they are thinking about it, whether they are going to get a dividend out of it, Zomato, from next year, a corporation which has huge losses. That's not possible. So I personally have not invested.
No,
Maybe
Aishwary, you are wearing two hats today. One is you are young professionals
Very true.
of below 30, and then you are also a chartered accountant who looks at value and by the old school of thoughts. What is value? I've spoken to lots of people who have communicated what they say. A 250 biryani you get at 110 rupees and served hot and tasty and also a good quality. It is value. Company is delivering value. So it will create multiplied customers maybe 5x times,
so
and
company.
keep on creating value and get more customers and deliver more value. And on day one, you are getting 10% return in one day, which internationally it is very difficult to get. People are getting money at 6% for the whole year. And here in one day, you're getting 10%. And what is value? Value is you are getting a 250 rupees high quality biryani at 110, and there are more customers will come. There'll be more value. This is a new age thinking.
But there will
And,
be
and let me tell you, Dushyant bhai, you raised a fantastic thing on two companies from two different sectors, and where there is a lot of visibility, lot of talk. And what has happened is the Zomato subscription from anchor investors you mentioned, which is done before the IPO opens. And the first day, this has driven very well-known companies like Paytm to file the draft prospectus on a double speed basis. All they were waiting. When can we sell our loss-making companies to a second round? Now you don't have to go for a second round, third round, fourth round. I'm talking about 2021. In this year, many companies have raised a round. Whether you go for it, draft prospectus often takes 6 months for IPO. And there are companies which have filed draft prospectus over 2 years ago, 1 year ago, including National Stock Exchange. They are not seeing the light of the day, maybe due to the dispute which is on MSCI. They are supposed to pay over 700 crores. Maybe there will be a settlement, maybe there will be a takeover, demerger, merger, whatever, corporate action. But Paytm is coming, and then also the topmost valued company in market cap on the exchange, Reliance Group, has announced they have got 2 startups, right? Reliance Retail and O2C. They want to list one of them before FY22. This is what Zomato has done. It has woken up the old companies.
Even
we will do in next 5 years, next 3 years. That was on the AGM on 24th of June, right? Now they say we want to do a listing of which company? Maybe retail, maybe O2C. We'll do one as soon as possible within FY22. But this is a good opportunity for all, including the investors who can participate in such stories. And we also know what this has done. This Zomato, that hype and interest by youngsters, and also mutual fund, which Aishwary mentioned, dividend yielding funds putting in this. Point is, money is coming in. There is money on the table. And also there is a Just Dial participation. A listed company through his subsidiary has taken interest in Just Dial, which is market cap is what? Below 15% of Zomato's valuation, right? Below 15%. They
about
need
7,000 crore. About 7,000 crore.
Right. Yeah. So that is coming to less than 12% of Zomato's valuation, and they needed money. They could not go to a private equity now for a first round, second round. It is already listed. Now they'll have to come with the IPO. So they negotiated with some business houses. People say Tata's, Reliance, and quite a few. And they have bitten the bullet, and they have come out. A company which is known to take over placements at a ridiculous valuations, and now is paying 3 times the value which was earlier during the year. It was around 400, 500 rupees. They are paying over 1,000 rupees for the placement. And hopefully there will be open offer, which people may not offer, and to participate in the growth story. Point is, money is coming in. Second thing is, I wonder, Aishwary, would you feel all the young professionals, of course, old, they have regretted. I remember Warren Buffett said he doesn't understand technology. Then he woke up later in the day and invested in Apple and multiplied his money. So older people, they admit their mistakes. Young people, do they need to redefine value? Value is not seen under spreadsheets. Value is day one, you are exiting. People say investment committee has given a decision to one investor, mutual fund, you must exit on day one. On that basis, you put in anchor money. So out of 10 companies, you have a probability game. X numbers will make money, X numbers will lose money. What is the net? Net, at least you will make over 10% return in a year, right? And hopefully give a dividend. So this is again a wake-up call for all professionals. SEBI has done a wonderful thing. It is allowing the market dynamics to play out. Let's see what's happening. And then you can always update a regulation by doing consultation paper. It's a wonderful thing our regulator is doing. But young professionals, Aishwary, are you ready to change your valuation models?
So I do agree with the valuation models that you're talking about that youth is seeing into, but I'm also looking at one of the very possible scenario that is out there. Millennials just ordering food. See, there are two things that we have to talk about. Those people who are like 25% or the investors are the first time investors into the market. The reason why they are coming into the market is because they feel for the company. Now, I am asking you one simple question, which is like, let's say if you are 20, 21 years old, one app which is giving you a discount of 50 rupees, another app that is giving you a discount of 100 rupees, and you're getting exactly the same thing. So where will you go? Will you be just because you hold the share of this company again and again? Will you go and buy a product from this company because you are holding the share of this company, or you will because let's say you are holding just 10 shares here, but here every time you are ordering, you're getting more than double the discount that you get from this app. Nobody is going to be here because they will always later on switch back to us. So ultimately, yes, initially this could give you a 10 or 20% return, but in the long run, the company is not a profit-making entity. If the company wants to make profits, it has to reduce its all these discounts. It has to find out alternate investments. And exactly the same, we have another giant sitting, which is just ready. And another thing which is happening is Amazon most probably is entering into the food market next year. Now, do you have the capital to beat Amazon with the people's money in India? The answer is no. If Amazon gives you that same product with at half a price, exactly the same things, nobody is going to care if they hold Zomato share.
Capital is available, much more is capital is available. Nobody had heard you can get so much, and companies are looking at, they will break all records in mobilization. What is the market cap of the companies in the field? Can you go into NASDAQ and see? There are 3 companies which are listed, and there is a US player, there is a London player, there is a China player also. And look at the valuations of them. Look at the valuations in terms of that. How do you do? Forget about net profit. Net profit number has gone. Even the professional bodies now, they have changed the model, multidisciplinary platform. Anybody can become a partner, right? So there is an end game. What is it? It is a top line. It is a top line. Numbers can be fudged. There is a fair value. So what is profit all about? Profit is the money you make on the table on day of listing. If you decided to hold for one day, what is value? Value is what you get, food you get, 50% discount, 70% discount. Amazon has succeeded because of the discount game. Because of fat margins. People know tomatoes which are available at 2 rupees to the farmer. Here people are paying 60 rupees. Where is the 58 rupees going? It is going to the middleman who is often not even disclosing his profit and not even paying small tax on it. So the profit definition has to be redefined. Another thing is we looked at Tatva. What is Tatva? Company. Fine chemicals.
Specialty chemicals.
It is basically an intermediate, right? Who are the customers? It is a B2B business. Exactly, right? What are the valuation of B2B business? B2B business is getting valuation of much more than a B2C business like ITC, and there are many other companies also. Normally, a B2C business gets a valuation of 1/3 the multiples of a B2C company which you have got customers. And today it is getting, what is the valuation, right? 47 times of some past historic number. And then they say average multiple is so and so. This is what is it? Why? Because of a temporary rise in global chemical prices. And next is a PLI story. Our government luckily has done good job in pandemic in terms of attracting investments. At least investments are coming in because of this PLI scheme, so that we are not import dependent for our raw materials because of the learnings what happened in pandemic last year. So kind of valuations you are getting. So this is 2 of the sectors which are getting wonderful valuations. Whether in Zomato, a successful startup space in terms of the brand value and terms of customers. Whether success comes in pays terms of dividend is a different thing, because the financial models and valuation models, they follow business models, and the mindset of the investor, whether a young startup investor or who is getting now lakhs of millions of young startup investors, they don't ask for dividend. They ask for the gain you are getting on a rolling basis, day to day, and the margins they are paying. Simple. Their investment is the margin money they pay, and the return they get on a day-to-day basis, week-to-week basis, month-to-month basis, because they are working 24/7. The time of 9 to 5 or 9 to 6 has gone. They are dynamic markets and the chemical story. So, yeah, Aishwary, can you go to a few live charts? Pick up some 5 live charts which you like in different asset classes, including coins.
So,
Then we will go to some chemical companies, we'll go to some startups globally and in India also. We'll also go to Reliance chart. So can we start with NASDAQ? That's possible? Oh, you want an Indian game, is it? Nifty, fine, fine. Let's do it. Yeah. So I think we are having Nifty because it's a celebration. We reached the all-time high, right? So this is 5 years. Can we have a long-term chart? Wow, this is it. In spite of pandemic, first wave, second wave. Of course, India is so far handling the third wave the best in the world. Far better than the European countries, far better than the Japan, far better than the American continents. What does it show? We have been discussing the trends. Charts don't lie. Charts speak for themselves. This is a trend. Since it was started in 1991, 1990, there was an oil crisis. There was a war, Middle East war, liberation story. Now, pandemic has brought another wave of liberation, the PLI schemes, the startups. Can we go to the next chart? Let's go to the global market. Dow, Nifty.
which one? Any particular one? Any particular name of this the chart that we have to see?
Creating records. What does it show? Lots of disposable money available with investors who like innovations and innovative companies on the NASDAQ. Can we have the Dow? Any views on this? Aishwary,
Yes, sir.
your thoughts?
I am very away from these things.
Look at the trends. Pre-pandemic, pandemic crash in March, which came as a shock and a surprise, and a recovery.
Too much liquidity into the market.
Significant money flowing in.
Yes.
Let's go to some different asset classes. We say coins are asset class. Look at some well-known one where good volumes are there and where some institutional players are also there. This shows a very, very high risk in the product, very highly volatile market, not for day traders, not for people who just trade for a week, who don't have a stomach for huge losses. Aishwary, your views?
I am not allowed, sir.
Dushyant, your thoughts? Aishwary can't read the charts, but he can show the charts which show the trends. Dushyant? Are you there? Can we have another chart of Reliance?
Yeah, Manoj, saying something?
Yeah. Your thoughts on the fluctuations on the Bitcoin's market? We
See,
just saw the chart. It is still on before we go to Reliance.
see, the thing is that whenever there is a hype on anything, be it a Bitcoin or be it any of the shares, the prices go up like crazy. But when the people who have bought early, they want to book profit at some pretext. So what happens when Elon Musk said that they will not be accepting Bitcoin as a payment? So naturally, people wanted to book profit and it's fallen. Then the Chinese government banning it and mining, banning the mining and all, this also has an effect on that. So the prices have fallen, and a lot of youngsters who invested, they suffered losses. So they came out of that and they again further sold their currency. So all these things have compounded to bring it close to 50% fall. But 64,000 level of the Bitcoin by itself was very high, not sustainable. So the fall, part of the fall was natural.
We'll go to Reliance. What a great chart. Beating the debt markets over the long term, among the largest borrowers in the market, and also a largest treasury player in the market, and which has announced a series of IPOs.
what is the price outlook? Any guess from this chart?
Well, it is very, very clear. It has consolidated on the 2000 levels, a good consolidation. And it has participated in the rise in the market and also supported the rise of the Nifty and the Sensex, since it is a high index player and cap on the index was increased. So it benefited from that. And now, incidentally, the vertical on refining, which was margins, GRMs were going down with the fall in oil prices. Now oil prices recovered, so the margins are increasing, so it will benefit from O2C also. And also it has announced the IPO in this financial year. Hello?
Yeah.
Can you hear me?
Yeah.
Hello?
Yeah, we can hear you.
Yeah, I think there was some technical issue, but carry on the discussion. Yes. So Reliance Retail is creating lots of wave. So there are now different benchmarks for valuations, as we have discussed valuations in detail. And so it should get support at the 2000 level and ride the trend in the rise in oil prices and valuations new age companies are getting, where it seeks to be a major significant player, and also it is doing, but it has to reward investors on some of the earlier takeovers. It took a stake in Balaji Tele at over 100, and it is quoting at 50% of the price at which Reliance took over. It took over then Networks at over 70 rupees. It took over Hathway. And what is the valuation of Den Networks and Hathway? Results have come. Den Networks has got over 2,400 crores in the bank, which is just about the market cap. What about the business valuations? So this is a learning the conservative guys may look at. But now it is how much money it creates on a day-to-day basis as the new young investors are looking at. Next chart. Can we have TCS? Can we have Infosys?
Just trying.
Yeah. Now tech has been the flavor for the week, thanks to Zomato and the top players in tech, which have the domain knowledge. Many of these companies have got good domain knowledge in finance and blockchain also, and guidance given by them is improving. The margins are improving, order book is improving, so price is also improving. Buybacks were announced by this company TCS, but those who don't participate in the buyback and they are continuing to hold on as long-term investors, they continue to gain on a regular sustained basis. Infosys. Can we have Infosys? A wonderful chart, 1991, when it added IPO. IPO was not successful, but consistent wealth creator, wonderful records, and now results showed very good growth and much better than expected. Margins also going up, big orders coming. And the point is, a few years back, a new CEO came. He talked about going digital and changing mindsets, a new design era, which was very, very tough. I interacted with the new CEO. He had experience in SAP and all. And there were corporate governance issues also, which Mr. Nilikani tried hard to resolve. But the results came this week, and tech is now reaching new high. Huge FI investment continues in the tech sector. Guidance is good. Consistent wealth creation. Buyback is, they said they will pick up from the market. But those who are not offering their buyback, they are making money on a regular basis and a consistent growth story. Chart speaks for itself to a great stock for long-term investors. Short-term people, they have an option of a Zomato. So can we have something from other sectors, HDFC Bank, SBI? Yes. We have been discussing SBI. In the beginning of the year, we discussed most undervalued stock. It went below 200. So in just about less than 7 months, so the stock has doubled and all-time high market cap. The subsidiaries are very valuable. People say the subsidiaries total, some of them, market caps of that is much bigger than State Bank. So value should still double even further. Our banker to the central government in consistently increasing market share also, whether it is home loans or whether it is car loans or it is recoveries on IBC also. Huge recoveries. Just yesterday, there was an item where the SBI consortium has got good money from recoveries of the assets pledged by promoter of companies dominating a sector who went to London, and recoveries are taking place. Money is getting added to the bottom line. We talked about profits, the real profits, in spite of the moratorium, which is for a certain purpose for a limited period because of pandemic. But riding ahead in market share and also building up technology. And also their CEO went to Yes Bank, highly technology enabled bank, and making efforts to grow the Yes Bank with excellent technology and excellent customer base, retail franchise. So can we have a private sector bank? HDFC Bank, RBL Bank. Can we have a long-term chart? This shows also the stock went down due to pandemic last year. It has recovered. Long-term chart, consistent wealth creator. It took a dip, a deep dive in shock of the pandemic when some pledged shares were sold by of large institutions also. So it did not reflect the intrinsic value, but it reflected the liquidity value. People wanted liquidity. So HDFC Bank shares was among the very few stocks which could be sold. For other stocks, they could be sold. They went to 10% of their value. And this stock held and recovered immediately with the proper communication by the excellent management it has been having over the years. best in corporate governance, best in communication. Can we have some chemical company charts? Look at Atul Limited. It's very vital. Atul, looking at the IPO of Tatva, you should see the Atul, which is a consistent, very, very old.
$7,000 to $9,000 is pretty fast. Actually, I think this time the lot of focus is on specialty chemical companies, and you will see almost all the companies have doubled or tripled.
Range of products and valuations here are driving many other chemical companies to come out with IPOs, and suddenly many companies like Heikel Kelkar, which has gone to 65, 70. Now it has crossed 150. These are the smaller. Atul is a leader, so we are looking at a specialized company. Of course, you have Reliance Industries also, O2C, and they are in a different set. Now, when you are looking at Tatva, and then you have those companies like Atul, whether Atul is better or Tatva is better, on the long term, market will decide. But on a short term, of course, people are expecting over a 40% return in the Tatva IPO in the first year because of the pricing models. Any other NBFCs? Can we see L&T Finance, India Bulls, NBFCs? Results have started coming and models are being changed. Here, see the rise ahead and the big fall. And again, the rise is there, but it is struggling. What is the reason for this? There has been a placement. Company has announced another placement, another fundraising plan, a newer business model, housing sector, which is doing well. Real estate is doing well. So why the company is lagging behind? Of course, yesterday's chart shows over 9 rupees gain, over 3% gain, riding on the big real estate demand, and real estate stocks have shot up. Hopefully, people will look at the valuations, price to book, as the NBFCs are valued, and the technology model, and it will get appropriate valuations when it does the next round of funding. Hopefully, at a much higher price to book. We all know what is happening in PNB housing finance. Huge demand from foreign investors. Huge demand. Any other stocks sector? L&T Finance? Yeah, the result just came yesterday. Market has yet to price. On a YOY basis, it has done well, but the loan book is not growing. Are the NBFC being conservative because of the pandemic? And banks are lending because of the government directives or government influence. So, but extra provisioning has been done in the results. So PCR has gone up, stage 3 provisioning is done, and the focus business is growing well. Rural demand is going well. Infra story is playing out. It was known for infra finance, which became a defocused area, and now rural is a focus area. On home loans, it has been conservative, giving to salaried class. There was a rights issue, there is capitalization. They have a mutual fund which is growing, which was meant to be divested, which can bring another 3 to 4,000 crores in the NBFC. Results came yesterday. You see how the market has reacted, how the market will react next week. Any other sector or stock? ITC? Let's look at ITC. That is the most talked about stock this week. The numbers show profits are more than Hindustan Lever. Pandemic, it went down to 160. Still, it's around 208 levels. While other stocks have gone up 3, 4, 5 times. The lowest performer in terms of price performance in the last 1 year. Profits are excellent. It has multiple divisions. FMCG growing at a fast clip. In the pandemic, company has served home deliveries, wonderful products. Even on sanitizers, it acted fast and supplying sanitizers and double quick time, high quality products, food products, personal hygiene, range of products, hotels, some of the best hotels. What is affecting the stock? Even some of the biggest operators has disclosed a big investment just this week. So will it play out? Hindustan Lever, can we look at it and then we can close? We have played out the time, excellent young professionals and excellent charts, a kind of a celebration of the Nifty all-time high and a record IPO over 3 lakh crores. Wow, consistent performer going up and up. When does it go down? It's supposed to be a stock which investors hold in a bear market also. Excellent performance. Compare it to ITC. What is the difference? Is it ESG, environment, social governance? ITC is rated very highly on ESG by international players. Even Hindustan Lever has gone up by 5 rupees on Friday. In the market, tech goes up, real estate goes up, ITC goes up, Hindustan Lever performs. Great asset to own as per the price chart. Indian business or the company is doing much far better than the original lever based in UK. Great work, great charts, great country, India growth story. Growing faster than anybody has anticipated. Some thoughts from you, Dushyant and Aishwary, for the India growth story. For the India growth story, some thoughts from you, Aishwary and Dushyant, and anybody else, and we close for the day.
So India is growing at a faster pace. We will see more investments coming in, more capital being deployed into India. With more regulations, clarity, we will see more and more countries or eminent people investing into India, and we'll see more growth in the upcoming years.
Anybody else? Aishwary?
Yes, sir.
Aishwary?
Yes, sir.
Yeah. Great, lively session. And can you close with a formal vote of thanks to all participants? Wonderful insights.
Yeah, thank you everyone really for staying in the webinar and learning a lot from all the things that we have discussed. And it started with a very vibrant thought, and it is ending with all the discussions that we had to take into the consideration. And thank you very much, everyone, for joining. We will see you next week at the same time. Till then, bye bye and take care.